Welcome to today's session. The topic is managing complex B2B sales motions for startup founder-led sales. I work with a lot of our portcos in our accelerator program and seed stage companies. And I know many of you, if you are Mucker founders, you're in the thick of it doing founder-led sales. And many of you don't have a sales background. So I know that the struggle is real. Today's session will hopefully cover a lot of questions that you've been asking me separately, as well as introduce many best practices that I'm personally excited to dive into with our guest, Luke Welch today. My name is Tony Yang. I run the growth team here at Mucker, which basically means I have the privilege of working with many of our founders to help them scale and grow their companies. And, I can't help every single company by myself. And yes, we do have a team, but we also love to bring in friends and partners that work with us in our portfolio companies, Luke Welch being one of them. Luke Welch is a go-to-market consultant with years and decades of sales experience. And he is also advising a couple of our portfolio companies. And so I'm excited to dig into this subject with you, Luke. But the floor is yours. Go ahead and let's get into the meat of it.
Thank you, Tony. Thanks for the introduction, and good morning, good afternoon to those of you that have joined us today. Looking forward to spending the next 50 or so minutes with you, trying to tackle what is by nature a complex subject and see if I can simplify it a little bit. It is challenging selling always, and as stakeholders increase and solutions become more broad, some of the process can get quite overwhelming at times for us. So I know as founders, many of whom who don't come from a sales background, what can we do to try and address this? So my name is Luke Welch. I have spent my entire career in complex sales. I didn't start in sales. I actually started my career as a Prince 2 accredited project manager, but found my first sales job at SAP, and I was tasked with taking what was a very expensive, highly configured product for companies with big budgets and selling that to the SMB space. And so I worked with a product team to come up with a fixed price template that offered best practices out of the box, that required a very specific ICP that it could be sold to in an industry vertical. And we took it to market. And I really would say that lit the touch paper of my career. I also spent some time at Salesforce. I was the founder of their retail vertical from a sales perspective, helping that to grow when they only had a B2B solution that was being reformatted for the consumer market. And I spent the last 3 years working as an independent advisor to founders, typically seed and Series A, advising them on sales best practices, how to do founder sales, how to make their first hire, how to build their first team, how to build their first team of teams, and hopefully scale. So excited to talk to you. Let's jump into some content. So today is designed for founders who are not from a go-to-market background. Often we come from a product and engineering, a different background from sales. And we're struggling to understand what it is to move forward in the sales process and make our customers successful. We have a complex solution, potentially, that's unsuited to PLG or transactional sales or self-service sales. It requires more nuance. It requires probably more personal engagement in the sales process. That doesn't mean that we won't look to automate as much as we can, but at the early stages, we have to be very hands-on as we secure our first customers. It's designed for those of us that already have some proof of value, hopefully an ROI with case studies that are repeatable, and that you're really tasked with finding that repeatable, teachable sales motion, building a playbook, and then using that to teach your first sales hires. But for the moment, and for today, we're carrying the bag. So my objective really is to try and help you as much as possible. And in order to do so, I wanted to focus in on what, in conversation with Tony, we see are 3 really common challenges that founders face. The first is being caught spending too much time with the wrong customers. I think as a first-time seller, it's really tempting to go straight to the pitch, to turn up and show your demo, maybe do your positioning, and exit the call knowing too little about the customer. And you can find yourself stuck in a cycle where you're constantly being asked for more demos, more information, but the actual onboarding and signed contract seems to be nowhere in a predictable time frame. The second is, and related to the first, being caught in a buying process that isn't understood. There may be no buying process at your customer, which is one problem. There may be a enormous buying process, which is the other problem. Maybe it's a deep procurement exercise, and you may not be best suited for what they're trying to achieve. You may not be best suited for the multiple, timely, complex steps at this point in your evolution. And that really is a decision point that you have to make as to continue or not. And then thirdly, struggling to track progress, predict outcomes. We see a lot of nasty surprises in our sales cycles. We think we're getting close towards a decision, and then the real decision maker appears and suddenly wants us to run all of the process again, the demos, the valuation, etc. And we're right back at step one. So there are some ways that we can start to address this. These are, for me, in my experience, learning to qualify and perform discovery early on. Sales is a volume game. It's about the number of at-bats that you can get. With maybe a 20% close rate for your leads in the early days, which may increase over time, you've got to qualify in or out and find the deals that you can win. Secondly is navigating through having a basic sales process, understanding where you are in the journey of making a sale. Now, there's an internal version of that, which are the steps that you need to take, and there's an external version of that, which are the steps you want your customer to take in collaboration with you in order to deliver value. And that should be accompanied by a good methodology, which is the how you sell, how you convince and how you engage and how you support the case for value in your customer's organization. And then thirdly, we're going to have to deploy some steps and tactics to drive momentum and to build and demonstrate buy-in from the customer and either get them to qualify in and become a customer or not. So in my experience, founders are successful when they do the following. They quantifiably attach their solution to the initiative the prospect cares most about. It's incredibly important that we get to the economic buyer. There are many individuals, in my experience, in an organization that can look, but there are very few, typically one or two, that can truly buy. So understanding what that buyer really cares about and making sure that you attach your solution to that is critical. Second is focusing on the business outcome that your solution delivers. Unfortunately, it's not about your product and your technology. Certainly in the early stages, it's about the benefits that you deliver and the business case that's made for the customer. If you can't make that connection between their pain, is the term we often use, and your solution, then you risk what stifles most deals, which is the temptation to do nothing, no change. Then thirdly, we need to understand how our buyers evaluate, what is their buying process and how they use this, and then use that in turn to tailor our sales process. If we have a specific aha moment that we know our product delivers, perhaps it's a new data insight which requires sharing of data from the customer so that we can focus a new perspective on their business. Perhaps it's delivering a tool into the field so that the field can speed up their insight processes that actually delivers their operational efficiency. Whatever it is, we need to think about what it is that's different about our solution and then position that in the sales process. So let's take a moment to talk about where we are.
Quick question, if I can interject. For those of us who may not be familiar with certain sales terminology, what do you mean by economic buyer?
Yeah, certainly. So the economic buyer is an individual that can say yes when others say no, and say no when others say yes. They're ultimately the person that can authorize or sign the check and that has the economic need that needs to be justified as well.
Great. Thank you.
Welcome. So we'll take a moment to just navigate where we are in terms of the maturity cycle that we go through as a startup. As I said before, we've already secured our first paying customers. We've established a pitch deck, basic ROI and onboarding model. And now we're looking to find out if that is repeatable. We're going to go beyond friends and family, and we're going to go and look for paying customers. And to do that, I'm not going to talk about the lead process so much today, but I'm going to talk about the sales engagement process. And to do that, we need to be able to qualify, to do discovery, and to perform solution validation and close. And the accompanying tools that we need to do that will be basic CRM to track our activities and build pipeline. The exit criteria from this stage, in my experience, is to take 30 or so leads through to 10 new customers. Now, that might be a bit high if your solution is very complex. It might be a little low if it's more transactional, but we want to document that playbook and exit with a reasonable win rate and some sales cycle metrics so that we know what time it takes to get through the process. But what drives complexity in a sales cycle? Well, there are many contributing factors. For me, solution is a common one. It's tempting to think that if we sell a single point solution, that may lend itself to a transactional sale. But if the dollar impact that delivers to the company is high, or if that transactional solution is customer facing, maybe on a public website, you can expect a lot of scrutiny and more stakeholders to get involved. Contrast that with a suite-based solution where you have multiple people using the solution, maybe multiple workflow. Again, lots of stakeholders will get involved. The second one that I think about is the current economy. The default for spend currently is no. Being best in category is simply not enough. We need to create a rock solid business case with ROI and TCO that is going to convince the economic buyer that this is a place that they want to invest in. And then thirdly, I talked about this a little bit, understanding that buying process. Is it a formal procurement, which may not be suited for our solution currently, or is it more ad hoc? In which case we might be able to really own the solution or own the process. In sales, it's very important, in my experience, to be proactive rather than reactive when it comes to the buying process. The more control and the more alignment around the buying process we can exert from day one, the better the outcomes. But these factors come together to increase the number of stakeholders, the number of proof points that will be needed, and the number of steps in our purchase. And this can drive high customer acquisition costs and costs of sales. So we need to develop a sales and buying process to manage this. This starts by taking a look at the buyer journey. Now, Tony has some content on this that I think is going to come to you around how to map out the buyer journey, but just very high level, our buyers tend to go through these 4 stages of identifying a problem, exploring the options that are out there, building their requirements in-house, and then selecting a supplier. And underneath that process, there'll be a process where they're internally seeking consensus from the different stakeholders. They're validating their findings, and they're getting approval to move through these different stage gates. But we also need to think about, why do they buy in the first place? Now, ideally, we have some type of compelling event. This is maybe a burning platform. True story, many years ago, CEO of RH, Gary Friedman, sent an email to his staff where he described the buildings of RH's Restoration Hardware stores as being on fire and the customers being burnt. This email went viral. It's become a case study on how not to communicate, but it was out in the public domain. And the sales team that I managed at the time took that email and we mystery shopped Restoration Hardware. We went in and lived the experience of the poor initial purchase and return, and we modeled it out on our platform and created a new vision for what that could look like. Needless to say, the moment and timing was perfect, and it did result in a major contract. But that is the exception rather than the norm. However, we always have to look for that in our buying base. More likely, our buying event will be something around a strategic initiative, a cost driver, a new customer driver. And our solution may only be partially attached to solving for that. There may be organizational change, resource that's needed to actually drive that initiative. And we may be just a factor of it. So we need to understand where we are in terms of the positioning within that strategic initiative. And then finally, latent pain. That is when we have a new solution that has a new take on an existing and latent pain. Sometimes we need to go and do the problem identification and solution exploration with our customers because they don't even know that this solution exists. So we need to understand where we are in terms of mapping into this buyer journey. Broadly though, we always want to engage early. If we have a validated solution, I would say we want to be engaging solution exploration as a minimum. The reason being is we want to help shape the criteria that will inform their buying process. We want to help the buyer make sense of the options that are out there. We want them to understand the benefits of the new way that we've demonstrated with our existing customers, so that they include those into any requirements that they build and then take to market. We want to also shape the process. Remember, I talked about that aha moment, the surfacing of data, or putting our tool in the hands of the users in the field. Whatever that is for your organization, let's make sure that we get that into the buying process. And then ultimately, our job is to help make the complex simple. Often our buyers are not purchasing every day. They may have a team that do that, but they may only get involved in procurement or validation of a solution once in every few years. So your job is to successfully guide them to realizing the benefits from your solution and avoid typical buyer pitfalls. So this is the process. Let's talk a little about the people in it. A lot of people get involved when we have complexity in our sales process. The roles and titles that we'll typically come across could be anybody in the C-suite, CEO, COO, typically business, some users, technology, maybe finance and procurement. But I wanted to talk a little bit about the roles that these individuals will play in our sales process. Let's talk about the champion. It's really helpful to assign different buying roles to the stakeholders that we engage. The champion is somebody that cares about the cause. They may be hired in to solve a problem. They may have done it before. They may be somebody that's on a certain career journey or path that is aspirational, or they may have been assigned the task by perhaps an economic buyer or a C-level stakeholder. But often they're not the budget holder, but they can really be your coach and your guide around the organization. They may be in the business, but they could also be, in this case, in technology, in which case they would have a different set of buying needs and buying engagement types. They could also be in finance and procurement if you're selling a finance solution, which could be interesting because you're selling to somebody that's both involved in the procurement process and actually the purchase and use of your technology. When these buyers come together, we call that a buying committee, a formal grouping of these roles that would be responsible for things like needs assessment, vendor evaluation, consensus management, risk management, and the ultimate approval and purchase. But it's really important to understand what your buyer cares about on an individual basis. And we have to start to tailor our message to each. So for example, I talked about our business buyer caring about solving the problem, ROI, and career, but our technology influencer will really care about integration, security, and total cost of ownership. In this case, we assign them as an influencer. They may not be ultimately owning the business outcome, but they can influence it if we don't meet their security or their integration requirements. So understanding these different buying roles and tailoring our message to each is part of our sales strategy. And we need to develop that for each of the buying roles. There isn't a one size fits all, unfortunately, when we get into these complex multi-stakeholder buying cycles. So for our champion, we might want to support them. They're going to be our ears and eyes inside our buying organization. We want to guide, we want to invest, and we want to build rapport with them. But for our C-level, our economic buyer, well, we're going to want to get to them with a very crisp exec summary of what's in it for me from a strategic perspective. So again, we're going to have to tailor our messaging to each of the different stakeholders in the group.
Hey, Luke, sorry to interrupt. I have a question which you actually might get more into later, but I figure I pose it now based off this slide. Have you noticed natural parts of a sales process where it makes sense to engage with each of these specific buyer roles?
Yes. So we'll cover that in a moment. It's very much part of the qualification and discovery stages. I would say, ideally, you're going to start off with the champion, or better still, the economic buyer. And from there, understand, and by asking the client who's involved and who the solution impacts and who needs to be involved, start to map out who these individuals are. And then if you qualify into the opportunity, you believe that it's a really good match between the pain that they need to relieve and the solution that you can provide to do so, then after that stage, you would proceed and engage with them. Does that answer the question?
Yeah, I think so. I think we'll probably get more into it later on.
Great. So let's keep going. So we're going to talk a little bit about sales process and sales methodology. I'll just start by defining these. The sales process is what you do. It's the steps that you need to complete to move forward in your selling and the buyer journey. And the methodology is how you do it. It's the art and science of navigating between the stages. It's how you qualify. It's how you do discovery. It's how you pull together and deliver the economic benefits in the form of an exec summary. It's really the combination of these two things that coordinate the buyer and seller dance. We're going to have our seller version of this, and then we're going to have our buyer version of the sales process. Let's jump into the sales process element. This is the what. These are the steps that you need to take in order to move a prospective customer through the sales pipeline to becoming an actual onboarded paying customer. And think of it as an internal checklist, and in which we have stages. These are very common. I would say the process is probably 80% common. You know, there are 7 stage pipelines out there. I've got 5 here. We're going to move from qualification to discovery to validation to finalizing proof and closure. And these will be supported by steps, tools, and tactics that will actually prove out that we've completed a stage. You can combine some of these stages, but you cannot skip. I find that nearly all of the delays and objections that we come across later on in a sales cycle are caused by having skipped over some of these stages. For example, not qualifying whether we should really be spending our time with the customer early on. You'll remember I said the 3 challenges that we often find founders facing are spending time with the wrong customer, not understanding the process, trouble tracking progress and outcomes. Well, these really are covered by these first 3 stages and the steps, tools, and tactics that we deploy to address them. Let's expand out the sales stages a little bit and talk about the steps and the tools that we would typically want to deploy. So in the qualify stage, typically this will be a first call and meeting where we engage one-on-one with our champion or economic buyer, and we want to understand, are they motivated sufficiently to make a purchase, and is there a sufficient pain that's aligned to our solution that we feel confident we can win this business? So steps are going to be something like a first call, and the tools are going to be a call plan template, which I'll share with you in a moment. And then we'll talk about exit criteria. Well, how do we know once we've completed that qualification that we can move on? Well, we'll probably provide a written summary and next steps. We'll look to move on to discovery, but this is where some of the misalignment can take place as to whether or not we're truly moving forward. And I like to introduce something here called an inspectable event. And that is an objective measure of whether your buyer is moving forward with you in the process from qualification to discovery. An example here would be at the end of our qualification call, we ask for meetings to be set up, maybe a path to the exec buyer, such that we can perform our discovery. And we might leave the call thinking that was a great call, but until those meetings are scheduled, objectively, we haven't moved forward. So we might be qualified in, but we don't know that our customer is. So we've got to look for action from our customer too. So this set of steps and tools and exit criteria is applied through each of the stages in our sales process. But this is our internal checklist. This is the seller side of the dance in the complex sale. What does it look like from the buyer side? Well, the terminology that we'll use will have to be very different because it's about delivering value. I want to share with you a public domain example of a mutual action plan.
Yeah, Luke, before we jump into this, there was a question from the audience related to your last slide.
Certainly.
So the question is, stage 5 signed agreement. Compare this to the previous slide to here where it showed the percentages. Why is stage 5 only 90%? Once a contract is signed, is that by definition a closed sale?
Yes. So within the finalizing closure stage, we will have the completion of redlining of T's and C's, the completion of negotiation leading to a signed agreement. So Once a signed agreement is in place, we'll move to closed one, which would be another stage outside of these. So if you like, that could be our stage 6, closed one. And thinking about it, that would have been a good stage to have added on here. So at this point in time, because we're finalizing T's and C's and signing, it's a 90% probability, and it will move to 100% closed one.
Okay. Comment from our audience. Someone did respond to that saying, it's not a closed sale until money is in the bank.
Yes, I've always believed that it's when it's on signature, but I agree. There's nothing like seeing the money is in the bank.
Okay, but I mean, it sounds like, perhaps for stage 5, finalized closure, perhaps the exit criteria is a signed agreement, in which case you flip that stage to close 1, perhaps.
Correct, yes. And as we build out the sales process, you'll see that that will be the exit criteria.
Okay, good.
Great, so I'll pivot again to the external view. We've got our internal checklist, which is going to tell us what we need to do to move through the stages. But this is where you coordinate that dance between the buyer and the seller. And this is a fantastic open source version of a mutual action plan from Outreach, a sales engagement platform company I have no affiliation with. It's just simply that you can download and use this one. And I'd recommend taking a look at it. Let's walk you through it quite quickly. It's essentially non-binding. It's set up typically at the discovery stage between the champion or buyer and the seller, and it watches both of the stakeholders through the steps that would be needed or the milestones to get to a point where we start to realize benefits. What I like about this is it actually has a date for the value realization from ROI, not just the onboarding, but the point at which the customer starts to see their return be recorded. And I think this is really the key to selling, because that's ultimately what you're looking to deliver as a result of your sales process: successful onboarding, confirmation of ROI, repeatable case study, happy customer, opportunity for upsell. The virtuous circle becomes complete. There are some details in here around the dates and the milestones and the outcomes, but what's so interesting is this maps exactly back to our sales stages. So we're not calling this qualification. This is a intro and fit meeting, but make no mistakes, this is absolutely about Outreach determining whether there's a fit between their solution and the buying process and the prospective customer. Then we're into discovery. They call it establishing use cases and scoping call. Now, a scoping call is a great way to get different stakeholders and users onto a call and really understand the pains, get the managers involved, and build out your case for validation, which is the next step, where they'll first present the ROI and pricing and a business case before going to an executive meeting, and then engaging more of the IT side with a pre-flight technical validation. Interesting that they choose that process. This is a sales solution with a sales buying audience. So they're going to work through the business, get to the executives, and then sequentially then go to IT for validation. You might argue that that should be done earlier on in the stage to mitigate risks, but this is the process that they've opted for. Then finally, we're into the proof stage, which is the legal review, the MSA security review, and then into closure, the final negotiation. That is not closed one. That is the next stage where we start to implement and the integration begins. So hopefully now you've seen both the internal and external view. Hopefully I've given you an appreciation for why the process is so critical for managing where you are with the buyer. And there are a series of internal stage gates that are really then refactored to have the buyer's best interests at heart and have their successful onboarding and ROI drive their process. I'll pause there if there are any questions.
Yes, great. Thanks, Luke. So first question is, someone asked if this mutual action plan will be provided to them, if you have some sort of working template that we can offer to our attendees. That's the first question. I'll pause there and then I'll ask my next question.
Yeah, of course. My pleasure. I'll provide a version. Yeah.
Okay, great. Thank you. And then, so this mutual action plan, how does one utilize this? So is this typically sent after the first call and used as a basis for communication in future meetings with the champion, the key decision makers to kind of use this as a roadmap for guiding the sales process? Like how does this used on a day-to-day basis, or on a in a real life scenario?
Yeah, ideally you would get to this in the first call, but if the objective of the first call is to explore fit between the two businesses, this may be a little too broad, daunting for the buyer at that point. I think you're still establishing trust, trying to explore fit. So I would typically see this being shared at the point that you're qualified in, you've got a champion helping you navigate through the business, you're seeing a path to an exec buyer, but you need to coordinate all of those steps. And if there isn't a procurement process which has already set out these steps as we prefer, this is your opportunity to have a conversation with your champion, which says, how have you set about evaluating it? Would you like to know best practice and then explore, share this document, share what you've seen as a best practice, and then incorporate any of their decision criteria and process into it? It is mutual. It is not being done to them. It's the benefit of your experience combined with their needs and then publicly shared. I like to go one step further. I like to create a repository where we put all of the sales assets, any demo recordings, etc. But we share this and we review it. And if we're going through a 3-4+ week process of discovery and validation, we're going to meet with that champion every week and review our progress and see where we are in this. And we're going to go encourage them to share it internally. I don't mind who this gets shared with. The more questions, the more eyes on it, I think the better for buy-in. The more it surfaces any objections, if the competition get a hold of it, I think it's going to tell them something about how we're taking control or being proactive around the buying process. So hopefully that answers your question.
Yes, great.
Okay, so I'm going to step away from process for a minute. I'm going to talk a little bit. Tony, you asked me to talk about sales methodologies, qualification methodologies. I'll dip my toe into the water on those. Again, there's a lot to bite off here on any one of these subjects. And I would just say, when you're starting out, just extract the things that seem relevant to you and your market. Do not try and boil the ocean. Maybe take a basic template and look to customize that. But you don't need to understand everything straight out the gate. Let's talk a little bit about sales methodologies, broad sales methodologies. If the process is the what, the sales methodologies are the how. And salespeople get very passionate. It's about passionate like they do about their favorite sports teams. Everybody has a strong opinion on what's the best. I would just caution you, as a founder that doesn't have a go-to-market background, do not try and adopt one of these wholesale out of the gate. I think it will constrain you rather than help you, but rather steal and borrow from what resonates with you personally and for your market. Let me give you a couple of examples. Sandler. Everybody in sales knows Sandler. It's been about for some 40+ years. It was intended as the first methodology to get away from the idea of the pushy salesperson and get into the consultative salesperson. You need to consult and build rapport, act as a trusted advisor. Your first call should say, look, Mr. Mrs. Customer, I don't know if I can help you. We have solved this before, but I don't know enough about you to say if it's the right fit. Would you help me learn more so that we can see if there's a fit here? If not, I'm going to help you and try and advise you on what the alternatives would be. And hopefully, we'll part as friends and remember this conversation. Different from maybe showing up with a pitch or a demo, it's a really great way to do more listening than talking. Gong, the conversation intelligence tool, have taken the outcome of hundreds and hundreds of thousands of sales calls and found the perfect talking to listening medium. It's about 40% talking from the sales side to 60% listening. That is correlated with the most positive outcome. So I like this. This is about asking good questions, listening, and coming out of a meeting knowing more than when you went in so that you can inform your next steps. Problem is, you can qualify out rather than convince. It puts some of the pitching to the back. You don't have to follow that, but it's also assuming that the problem is well known by your buyer. If it's a latent demand that you're out pitching for, well, then this really probably isn't going to work for you. So how about Challenger? And Challenger sales is very common methodology a lot of people have heard of. Started with some great research that kind of upended some of the tenets of Sandler, which is not about relationships at all. And I think there's some truth in it. The idea of the handshake on the golf course, the steak dinner, and the deal being done, I think that is long gone, thank goodness. This is all about process. And Challenger has a process where your call structure is you turn up and you teach. You lead that first call with insights about the market. Then you tailor a pitch to resonate with power, and you take control of the process. Now, that's a little bit more of what I would call a pitch and listen approach. It's great if you have the market insights. It's great if you have a lot of experience and you're confident taking control, but it can lead you to pursue the wrong deals. You're trying to create urgency and demand where there may not be any. And as an early stage seller, that's a risk. So I think sometimes this can be pushy, and our founders may not have this kind of experience to engage with this type of methodology. So I just encourage you to experiment with the two different types of methodology. Question and listen being the first, pitch and listen being the second. But I'm going to deep dive on the methodologies that I think are really critical to you. That is qualification, asking hard questions. Can I win a deal? Discovery. Can I find out enough about my customer and their environment to link their problems to my solution? And then validation. Can I put all of my learnings together into a final pitch or exec summary with ROI, with demo that aligns to the mutual action plan and drive an outcome? So stage one, we'll jump back into some of the stages. I'll do this pretty fast and furiously, but we talked about the need to have a call with our champion potentially. We're going to employ some tools and tactics here. BANT and MEDDIC being two of the most commonly known qualification methodologies. So let's jump down into what these are. So BANT, budget, authority, need, and timing. This is the most simplistic qualification methodology of all. Its strength is that it's simple, it's memorable. And I still do it today just to kind of gut check where I am in the process as to whether somebody's serious. It's better suited to more of a one or two call close, first call, quick discovery, demo, alignment around who the buyers are, second call, review proposal with buyer, execute. It's not going to explode the diagram and help you understand who all the different roles and processes are. So we need to add more in here. It lacks the detail for a complex deal. I would recommend spending some time looking at MEDDIC. It's a methodology developed by Parametric Technologies, PTC. It's been around for a long time. It is very comprehensive. It can be too complex, but it really is designed for large buying teams. And here we might start out a call with our champion, identifying the pain, the problem that needs to be solved, deep diving the metrics. Oh, how's that impacting you currently? What would be an acceptable increment in how that currently performs for you to consider an investment? Oh, who else is affected by that? Now we can start to maybe get to the decision process and map out who the stakeholders are. Okay, so how are you evaluating that? Who else have you looked at? Who authorizes the spend, the economic buyer? So by having these as more of a checklist to walk you through your qualification call, you start to really build out the data needed to say yes or no, this is a deal that we should pursue. So how do we execute on our qualification call? We need a plan. We need to prep hard and qualify with care. This is probably the most critical call. This either starts or ends your experience, and it sets up for a successful engagement. I remember they were saying there's no second chance at a first impression, and this is your first impression. And to prep, I think there's really two things that you need to do. Qualification online is critical. Leads they're expensive. They're the most valuable commodity you could possibly have. Carve out 30 minutes to 60 minutes before that first call to go and research that individual, that organization. Look at what you can find publicly. Look at their peers. Have they just gone through a funding round? Pull up their 10K. Look at the balance sheet. mystery shop their brand, go and buy something, return it, understand the experience, come to that call with insights that you can share, and think about the gaps that you expose as a result of your early research in qualification. Where does the current experience fall down, and how might that champion be interested in it? So do that first, and then set up a call. And remember, this is an intro and fit call. Do not call it a qualification call when you send the invite. Do not say qualification call to your buyer. It's just uncomfortable. I'm sure many of them know exactly what you're doing, but it's got to be about mutual benefit here. And so setting up the sections, the upfront contract, let's role play that a little bit. I'd like to explore mutual fit. I want to identify if we can address your needs and talk about next steps. If we're not a fit, I'll try to help you as much as I can with alternatives. And then we can part company having learned something. You would be amazed how many buyers come back when you qualify out, having really appreciated the experience of being walked through what's in their best interest, having really understood what you do, and then at a later point realizing that's exactly what they need, or they know someone that does and they refer you to that person. It's incredible. So that upfront contract of how you run the call is critical, but then you want to dive into the pain. So what prompted you to engage? I was researching you online. I returned a product, but I didn't see the cash in the bank for a month. So what's driving your initiative? And then have them walk you through the technical challenges. Well, it's, our systems aren't talking to each other. Oh, great. It's really interesting to understand that. What does that mean from a business impact? What does it mean to you personally? It's really important to understand the personal motivators behind that, in this case, champion. Why do they want to fix it? Gain enough information so that on the call you can summarize your findings. It sounds like you have to solve this buyer returns and cash flow issue because your buyers are complaining about you and you're seeing a decline in sales. I've done this for customers 1, 2, and 3, and we saw the following ROI, and we did it through, maybe you pull up a quick couple of slide demo. And then you ask, do you agree we could help? You get that mutual buy-in. Then you want to do something that's very important, which is to validate the spend and price. There's a reluctance, I think, with founders to talk price on a first call, but putting a number out there and seeing that reaction is critical. If it's a 6-figure investment, you want to understand if the ROI and urgency is there to validate that type of spend. And then get to the decision process, get to the timing. At this point, we're not going to share the MAP, but we will get to that. So if you're qualifying in, it's a great call tip. Schedule that follow-up call live. Tony, any questions?
No, I'm just mindful of time because I know we
Yeah.
still have quite a few slides to go through. So let's keep going and then we'll address questions later.
Absolutely. I'm going to jump over the economic buyer. I think we've talked a little bit and we answered some questions about that. We talked about exit criteria that we've qualified in from our perspective, but the buyer, for us to truly know that we can move from qualification to discovery, needs to start following up on those next steps. Did they schedule that meeting? Did they provide data? Those are objective. That's objective evidence that they are moving forward with us. We are running out of time, so I will be quick through some of the content. I'm going to get to the exec summary in the validation stage, because I think that ultimately shows how all these steps start to come together, and I will make these slides available, of course, so you can look at the process steps and some of the detail within it. But discovery is where we gain the information such that we can quantifiably attach our solution to the initiative that our customer cares most about. And at this point, we're going to have to multi-thread through the different stakeholders, IT, maybe users, maybe VPs, and we're going to be documenting our findings. Those findings are going to inform our demo and our ROI. But we're going to want to do that to the champion. Initially, we want to go through an iterative process. At least in this process that I'm looking at, you may want to remove those stages if your sales process favors less. And we're going to start to build out an executive summary that pulls all of this together into an asset that covers every facet of a decision maker's criteria, from implementation plan, ROI, timing of payback, through to summary, resources, affected resources needed, onboarding. That's really the critical thing. At this stage, we're going to update our MAP to answer your, come back to your question earlier, this is really where we introduce this. But we're going to perform a series of meetings that are designed around problem and process discovery to gather that data. So discovery can take many, many forms. It could be screen sharing their existing solution. It can be sitting alongside them in a call center. It can be going on a ride along with one of their reps or field technicians. It can be mystery shopping. It can be running a scoping call. But through all of these calls, I like to get into 4 levels of discovery, starting with the problem, the impact, the financial impact, the personal impact, why do they care, and then organizational readiness. This problem may be so big for this organization, they're simply not able to take a bite of that apple at this point in time. And again, this is getting back to a qualification, because qualification, you can qualify out in the discovery stage if you unearth a new piece of information that says there's no longer a fit, or you can try and address that and position around it. But organizational readiness is something that we often forget in both the discovery and the qualification stage. I'm going to go fast through the board slide here. Suffice to say, beware. It's a step that many of us overlook. Understand with your champion whether this will be going to a board, whether this is required through a spend level threshold, or because it's a strategic initiative, or it's part of a change management initiative. Do your research, ask the questions, identify it early, understand timing cycles. It's unlikely, in my experience, that you will go in front of that board, but you will want to, at the very least, control some of the messaging. And you'll do that by aligning with your buyer and hopefully producing an excellent executive summary that pulls it all together. So lightning fast through discovery, but the exit criteria here is that we've quantified the impact. We've got our champion acting as our coach. Maybe they're texting with us at this point. They're really engaged. We're starting to get information about who our supporters are, who our detractors are. We understand decision criteria, and then objectively, they've set up that exec meeting. It's on the calendar. We know it's going to happen. That shows their buy-in. It shows their commitment. They're updating the MAP, and we're getting positive demo ROI feedback. And of course, this is a perfect world scenario. It never goes quite like this. Into stage 3, which is the validation, and we're pulling all of the findings together, and we're going to build buyer-tailored assets. The most central, of course, is the exec summary, which for the economic buyers, the C-suite, the senior stakeholders, really pulls everything that they would need to make a decision. And you want to own that document. This is about being proactive rather than reactive, rather than trusting that your potential customer will pull all of that together. You've done it before. You know how to do this. You want to input and make yourself valuable and guide them through that and show them all of the perspectives. Ultimately, they may decide not to use it in their final board presentation, but done well, you can be pretty sure that some of your input will go into that process. This is a great time as well to be tracking buyer sentiment. As I alluded to, hopefully your champion is giving you some coaching on the different buyers and their sentiment. Are they neutral? Are they positive? Are they a blocker? And you're going to have to address your sales strategy to those individuals. You know, in finance, you might be feeding them white papers. You might schedule an ROI and proposal review proactively. For the users, if you've got pushback from the field for a field solution, well, then you're going to have to really get ahead of that and spend some time with them, address what's in it for me, really go a little further, do some hand holding. Or if that's too, you know, it may even be a qualification criteria. It may even be a sign that this isn't winnable at the moment, depending on the balance of power that the influencers might have. There are tools that you can use to map this sentiment. This is orgchart.hub from HubSpot. A great tool. You know, I recommend using HubSpot or Salesforce. There are alternatives out there for your early founder based selling, but the visualization of the multiple stakeholders in a tool like this is so critical as you go through the process. And it also is a great record if you're, you know, involved in 10, 20 of these cycles, just to keep practically where you are. So I wanted to get to the exec summary because I think really this is the manifestation of the hard work to get us to the process, to the point in the process where we're really validating and supporting the buyer making their decision, hopefully to proceed. It goes by different names. I've heard executive close deck, awful, exec summary, exec plan, exec proposal. This is where we pull together typical ingredients. And for me, there's 8 things that go into it. I won't read the slide at this point from a timing perspective, but the key things here are crisp summary related to ROI with pricing, customer stories and proof points, and an onboarding plan with all resources. You want to cover all of the potential objections that you will face proactively. And that's, people ask me about objection handling all of the time. I think part of it is thinking ahead for your buyer. What are the questions that are going to need to be answered? How would we proactively pull those answers together? And this is the embodiment of that. Many examples out there. Be happy to talk about that at a later date. With time, let's talk about the exit criteria from this stage. We're looking for validation, nod that the budget and timing is confirmed, that we're starting to meet the approval team. And we're moving into finalizing the proof at the point we're producing terms and conditions. We're doing any final tech briefings. We're maybe going into pricing negotiation. We'd want to build a negotiation plan, a give to get. I would recommend always pushing for reference and publicity clauses at this early stage, because that's going to be your lifeblood to seed other customers. And at this point, everything lined up, you will be in a good position, but there will always be surprises. However, this is the point, back to the earlier question, where you would hopefully move to 100% close one. So let's start to wrap up. So in conclusion, through deploying a process both internally and externally for the buyer, focused around the business benefits and outcome, we can start to develop a sense of fit. And I think only with practice this comes. Maybe, you know, after 5 or 10 customers, you'll start to see not only is there a business fit that you quantify an ROI, but there's something beyond that. There's a fundamental belief that you can detect from different stakeholders that change needs to happen, that they're able and motivated to do so. That there's a good technology fit, that they respond quickly around collaboration on onboarding, on integration, on security. That there's a relationship fit, that maybe, you know, you've got a WhatsApp thread with the champion, maybe even with the economic buyer. You just feel, even though it's not a relationship-led sale, the relationship really matters. And then finally, this notion of organizational readiness. Are the customer's resources available to support change? I'm going to skip over the go-to-market maturity stage. Suffice to say, there is similar methodology we can apply to the next part of your journey, having now validated that you have a good win rate and reasonable sales cycle metrics and built your playbook. And I'm going to close on this. 3 actions from today. I think you've heard this many times, but qualification is life and death. You cannot afford to spend time with customers that are in no position to buy from you. So qualify hard, but qualify with care. Do it with good intentions. Do it with transparency, and be very open about it. Create a buyer-centered sales process and embody that in your mutual action plan. And then quantify your progress throughout by identifying the steps and tactics that are really germane to your solution and your buyers to track progress. And think about those inspectable events as exit criteria between the different sales stages. I'll pause there, covered a lot. Hopefully this was useful for you today. Thank you very much, Tony.
Great. Why don't you flip to the last slide, and then we're very short on time. Okay, I'm going to ask one question that I think is an important question to ask by someone from our audience. How does what you laid out in terms of the sales cycle process and stages change depending on deal size?
Yeah, it's entirely possible that the deal size could warrant a qualification and discovery joint call, and you move through both of those. You know, if you have more of a point-based solution, you can probably do most of the qualification and discovery on that first call, and maybe even move to, you know, validation of the solution and benefits. But likely that would be a second call. So you can combine some of these stages in that respect and speed up the process. Equally, as you see today, I've aired on the complex end of things. It can start to balloon and, you know, can get quite difficult to manage.
Okay, and I'm going to ask one last question, and apologies to those who did post questions and we didn't get to, but this question is commonly, it comes up quite a bit in my one-on-one calls with our portcos, which is, Where does proof of concepts play into this whole process? And there's also unpaid proof of concepts and paid proof of concepts. How do you position those, and how do you leverage those as part of the selling motion?
Yeah. Just quickly, I'd be happy to give some written answers to questions that we haven't got to today, and we can include that in the follow-up. Proof of concepts, I think, is part of you determining what your buyer needs to have that wow moment. A little bit like I talked about earlier, if there's a kind of an insight into data that your platform provides, maybe that's a good example for a proof of concept. If the data is readily available, maybe it's publicly available, maybe it's a very light lift to that proof of concept. Typically, we find that the data is, behind, is protected, and we want to apply a much more rigorous framework going into and out of a proof of concept. Very clear success criteria up front in writing, very clear resource requirements from both sides, KPIs around what we're looking to prove, and a really manageable timing, and ideally chargeable. Now, we may have such confidence that our proof of concept is going to deliver that we want to do that on a free basis. But again, to be determined on a case by case, depending on what you're selling, who you're selling to, and some of those dynamics. So it can range.
Great. I know the person who asked that. I work with them. So to the person who asked that, talk to me. I have a much more in-depth answer regarding proof of concepts. Okay, we're going to wrap up. There was one quick question that I'm going to address right now. Someone asked, what was the org chart tool that you showed? I believe it's Org Chart Hub, if I'm not mistaken.
Yes. Yeah,
okay.
It's on the HubSpot app exchange. Yeah.
Okay. Either if you are a HubSpot or Salesforce, I think this person is on HubSpot, there is a HubSpot marketplace. Just simply search org chart, and there's several options that will come up. I think Org Chart Hub is one that I'm familiar with on HubSpot. You mentioned Org Chart Plus on Salesforce, so check out some of those. All right. Again, apologies for those of you who did ask questions throughout the presentation, but we didn't get a chance to answer. On your screen here, you see my email as well as Luke's email. So I encourage you, please email to both of us the questions that you had asked and didn't get answered. And both Luke and I will be more than happy to address those offline. If you are an entrepreneur just starting off and you find stuff like this helpful, at the very least, come and check out some of these sessions that we do on a regular basis, or go to our blog. But if you do need dedicated help, we do run an accelerator program called Mucker Lab. And so I encourage you to go and apply at the website URL you see there, mucker.com, and you can navigate to the application form. Thank you, Luke, for spending time with us. I know it's very difficult to unpack such a large and deep topic of complex sales. Just the adjective in front of what I just said when we're on sales, very complex. There's a lot that we could have dug into, but thank you for giving us a taste and some actionable steps on how founders can start to adopt some of these best practices. Thanks for joining us, and we'll see you in the next session.